On calls with investors and analysts, you talked about a lot of new products that you want to introduce, including retirement accounts. Why did Robinhood prioritize the cash card product, given all of the other opportunities you see ahead?
Emily, first of all, thank you for having me. Of course, we're working on many other products that make investing easy for an entire generation of folks to get started with. But particularly excited to share here the Robinhood Cash Card. And what it does is basically it's a spending account and a cash card, a debit card, that allows you not only to spend on things that you need, but will help you turn that into investing on things that you want. What do I mean by that? It does three things really, really well. One is it does actually help you kind of round up the spare change. You buy a cup of coffee, we'll turn that into a spare change that you can invest in crypto or stocks. So turning spending into investing. The second, Robinhood, will give you a weekly bonus to reward you for that and help pitch in and support your investing journey. And finally, we're also working with merchants and retailers to say, how can we help you get even more savings, especially in this context of inflation and price rise? Now, your question is valid, which is why this? And we think of this as just another step. The next big step in investing is really tackling spending, because we think that this is expanding the definition of investing. You don't have to wait till you accumulate wealth to be able to then invest to grow it. You start investing at the beginning of the financial journey, right when you start spending.
So far, Robinhood earns the majority of its revenue from trading activity. What are the signs you have that a cash card or spending account is something that Robinhood users want?
There's a couple things. First of all, we have a cash management customers that have been using it as part of the brokerage account. We do know, based on customer research, that the next generation of folks are debit primary. They're wary of credit card bills. They're wary of kind of the pitfalls. But at the same time, they have high interest in investing, whether it's be in stock market or in crypto. And so we think that this is a way that we can actually help them not only just like go about their everyday existing behavior. This doesn't require them to change anything, but as they do so, they'll start to kind of like put away a little bit of money towards their tomorrow, towards their future. So the early signs that we're getting from our product testing are very strong, that people love this connection between spending and investing. One customer in our research described it as, this is a debit card with all the trappings of a credit card and none of its pitfalls.
What makes Robinhood different from other companies that offer a cash card?
There's a few different ways that we have explicitly designed this product. First of all, just like we did with investing, we brought all of the design principles, how to make this mobile first intuitive experience and not unpleasant or confusing or even painful like a root canal. Most of the services that you use are not exactly intuitive and mobile first, which is really important for this generation of people. So that's one. Second, just like we did with the zero commissions and made the economics work for our customers, most of the debit card products out there, they either require you to pay subscription fees or there's some hidden fees. There are no hidden fees, no overdraft fees, and we give you rewards to be able to use this card. And finally, I think there are many other products that are either focused exclusively on savings, or they do focus on P2P or sending money and not really investing as an afterthought. The core thesis here is spending and investing. If you can bring them closer and closer together, then you can expand the definition of investing so that you can get started right at the beginning of the journey. And that's more relevant for today's generation.
Now, Robinhood did get into some hot water for its proposed cash account previously, saying it was going to be backed by the SIPC. It wasn't. What'll be different this time?
So I wasn't there at that time. This product actually is a cash managed, it's a spending account and a debit card for which we partner with our bank partners, Sudden Bank. We also have the card issuance from Morgan Stanley, and we have money services businesses in each of these states that we are starting to operate in. So this is very much it's a separate entity from the brokerage. So the entity is a Robinhood Money, which is a money services business. What it allows us to do is actually align with customers and kind of the regulatory structure here that allows customers to think, oh, this is a spending account different from my brokerage account. It turns out that's how people do the mental accounting. They don't think about their brokerage account in the same vein as their everyday spending account.
So how much revenue do you expect to earn from this product in particular?
I think there's a couple really strong things that we are looking for here. One, of course, is our customers really who sign up for it, really loving the product, using that for their everyday spending, turning those cups of coffee into investing. And of course, just like many other fintech products, there's the interchange fees that the debit interchange that we learn from this. But the second thing, which is also really powerful for customers as well as us as a business, is it starts this virtuous cycle of spending turning into investing that is really good for customers for their long term. Obviously, compound interest is great, but also great for us as a business, more diversified and more connected, and we have multiple product lines now.
You mentioned in your announcement that for Gen Z, credit cards just aren't as popular as a payment method for millennials. Why do you think that is, and how does that change the future of financing?
Yeah, and this is fascinating, Emily, because when you dig into it, there's a few different reasons. One, of course, the default assumption you go in with is, of course, they're still building their credit, and therefore, the credit cards are not accessible to them. There's some truth to that, but there's two other reasons. One is we found a lot of interest from customers in terms of being in control of their cash flows, right? And being very wary of predatory rates that dig a deeper and deeper hole of debt and that they're not able to come out of. So that's, I think, one key reason. I think the second reason you think about is there's always a catch. And this is verbatim some of how people describe it, that there is a catch in terms of the rewards are restricted for a few, right? If you pay your, X $100 fee per year, then you get this beautiful card. If you pay this much money, then you get all of these points and so on. We, just like we have been trying to do on the investing side, we said, what does it mean and what does it take for us to give whatever was reserved for the few for everyone, right? Great looking card, a great app with lots of in-app security features, intuitive design, and rewards for that feel like a credit card without any of the catch.